My name is Wakumelo Mataa. I'll be your host for tonight from the Center for Trade Policy and Development. Tonight we will have a conversation around something that is very dear to my heart, something that I expect to be dear to your heart, and that is the economy. It is supposed to be dear to our hearts because whatever happens to the economy greatly affects how you and I live our daily lives. And so from the Center for Trade Policy and Development, we recently launched a document, a policy brief, dubbed the State of the Economy Brief, giving highlights for the first quarter, as well as prospects for what we think the second quarter will look like. So our conversation tonight is going to be anchored around that policy brief. And so what we're going to do is to try and zoom in into the first quarter of 2021 based on selected macroeconomic indicators. We sort of track how these macroeconomic indicators performed from Q4 of 2020 getting into Q1, and then we use this as a lens to envisage what we think quarter two is going to look like. Now, as a way of introduction, I think it's a well-known fact that Zambia, like many other countries in the world, is suffering from the negative impacts of the COVID-19 pandemic. We know how much the global health pandemic has affected our lives and our livelihoods. But more so, it's important to note that perhaps what may be unique about our economy is that the economy was already deteriorating even before COVID-19 kicked in. And so when COVID-19 kicked in, what we saw last year is that economic activity slowed down, and now the Zambia Statistical Agency, for instance, estimates that economic activity or economic growth shrunk by about 3% in the year 2020. But in the third and fourth quarter of 2020, what we saw is that the economy sort of started bottoming out. That is slowly coming out of the recession. This is evidenced by the statistics, again, that we have from the Zambia Statistical Agency, as economic growth is estimated to have shrunk by minus 3% in quarter 3 of 2020, but slowed down to minus 2% in the fourth quarter of 2020. So how then does the first quarter of 2021 look like? Just to mention that in as much as I'll go through what we have from the Center for Trade Policy and Development as our picture for the first quarter of 2021, later on the show we'll be able to open the phone lines, and it will be nice to also get your perspectives. You can share with us what you think and how you feel the economy performed. So our conversation in terms of the economy is going to start with we'll start talking about something that is not one of the domestic macroeconomic indicators per se. It is a global macroeconomic indicator, but one which is key and strategic to the performance of the domestic economy, and that is copper prices. So what's the story like in as far as copper prices are concerned? So what we see in 2021, the first quarter of 2021, is that we observe an upswing in copper prices. In fact, copper prices maintained an increasing trajectory all the way from the first quarter of 2020 through to the first quarter of 2021. But perhaps what is interesting and important to note is that in the first quarter of 2021, copper prices hit a record high of about $9,000 per ton, which is the highest in the immediate past decade. In terms of the factors that underpin this particular picture, what we see is that from the onset of the COVID-19 pandemic, the international metal exchange market suffered also from supply constraint. Case in point is Chile, for instance, which is a major supplier of copper, which is still also suffering from the COVID-19 effects. So the copper productive and production capacities for Chile went down, but also there was an increase in the demand for copper on the international market, as many economies, especially China, were sort of resuming industrial activities post the first wave of the pandemic. Now, how does this speak to our domestic economy? So that then takes us to one of the macroeconomic indicators that we've tracked as CTPD, and that is the exchange rate. Now, as you may be aware, some of these terms may be technical, but we will try on the show to break them down to the simplest way possible. So the exchange rate is basically speaking to how the Zambian kwacha relates to other major currencies outside the country. So a case in point is the United States dollar, which is like a vehicle currency. So that is the standard which we use to measure the performance of the kwacha. And the picture in 2021 is that the exchange rate continued to depreciate, as the case was in the fourth quarter of 2020. In fact, this has been an increasing trend all the way from the first quarter of 2020 throughout to the first quarter of 2021. But perhaps what is important to note is that getting into the first quarter of 2021, we observe a slowdown in the rate of depreciation of the exchange rate by about 4% compared to the 9% with which it depreciated moving from the third quarter of 2020 into the fourth quarter of 2020. But all the same, the picture is that the exchange rate has continued to depreciate. In terms of the factors that explain the picture that we are seeing with regards to the exchange rate, is that I think from the fourth quarter to the first quarter of 2021, there was a slowdown in the demand for foreign exchange reserves because, as you may be aware, as a country, we sort of, through the government and the Ministry of Finance, we put a halt to the servicing of external debt towards the end of 2020, and so that sort of dwindled the demand for foreign exchange reserves and partly contributed to the slowdown in the rate of depreciation of the Zambian kwacha against the United States dollar. What is also interesting to look at now is putting together what we've talked about, the copper prices and the exchange rate. Now, it is argued that the Zambian kwacha is a commodity currency to a large extent. What that means is that movement in commodity prices, among them is copper prices, which is strategic and key to the performance of the Zambian economy, to a large extent determine movements or variations of volatility in the domestic currency. And so what we expect when there's a rise in copper prices is that there should be an increase in the inflows of foreign exchange reserves in the country, which is then expected to boost our gross international reserve position and ultimately widen the scope for our central bank, which is the Bank of Zambia, to intervene in the foreign exchange market and stabilize the kwacha against major currencies. However, what we see from the data is that the relationship between the exchange rate and copper prices from first quarter of 2020 all the way to the first quarter of 2021 is counterintuitive. That is to say, it's against the intuition which we have just explained. What we see is that the exchange rate continued to depreciate even though copper prices were rising. Partly, this can be attributed to the debt servicing costs that we have continued to incur as a country. So what this essentially means is that whatever inflows of foreign exchange that might have been coming from the mining sector, from the sale of copper, were not able to translate into increased gross domestic international reserves, gross international reserves, which would then translate into the stability of the exchange rate. So that is one way of looking at that particular picture. But also what is important to look at, perhaps, is how we have performed in terms of the trade balance. So what we see from the data in terms of the trade balance is that as the case was in the fourth quarter of 2020, where we recorded a trade surplus. So from the figure showing on your screen, what you see in blue shows you how much we exported as a country, and what you see in orange shows you how much we imported as a country. And the picture is that I think from the first quarter of 2020 all the way to the first quarter of 2021, we have been recording a trade surplus. But from the fourth quarter of 2020 to the first quarter of 2021, we see that the value of the trade surplus sort of declined, and this is premised on a decline in both the value of exports as well as the value of imports in the first quarter. So moving on from trade, what is also important to talk about is something that must relate quite easily to you and to me, and this is something called inflation, which is essentially speaking to the aggregate prices of goods and services on the market. So when you go to the market, when you want to buy whatever it is that you're buying, so the change in the prices of the goods and services that you find there is what we track under this concept of inflation. And here what we notice in the first quarter of 2021 is that inflation increased from 17.53% in the last quarter of 2020 to about 22.17% in the first quarter of 2021. In terms of the factors that have that explain the rise in inflation over this period, there was a substantial increase in food inflation, whereas non-food inflation slowed down. So inflation as it is, that figure that we're announcing, that figure that we're speaking to, which is 22.7%, is a makeup of two components of inflation, which is food inflation, which speaks to the prices, the aggregate prices of food items in the economy, as well as non-food inflation, which speaks to the aggregate prices of non-food items in the economy. So what we notice from the data is that within the first quarter of 2021, if we check the next picture that we show there, where the blue shows you the headline inflation, or overall inflation if you like, which is a combination or a mixture of food inflation and non-food inflation, and the orange gives you the developments in food inflation, whereas the gray gives you the developments in non-food inflation. And what we notice here is that food inflation increased substantially from the fourth quarter to the first, from the fourth quarter of 2020, that is, to the first quarter of 2021, whereas non-food inflation sort of slowed down from that much to that much. So that is from about 18% to 16%. Food inflation over the same period increased substantially from about 17%, increasing to about 26.9%, and that contributed to the rise in overall or headline inflation, if you like, from 17% thereabout to a quarterly average of about 22.1%. So essentially, what that means in simple terms is that commodities on the markets have become more expensive in the first quarter of 2021 than they were in the fourth quarter of 2020. Now, what is also interesting to look at is how we are performing in terms of this inflation that we are talking about within the context of the 2021 national budget. And so if we are going to talk about how the economy has fared, it will be nice to contextualize whatever we're talking about within what the 2021 budget tries to say and tries to achieve. So in terms of inflation in the 2021 national budget, we have a macroeconomic objective which says government intends in 2021 to reduce inflation towards the upper bound of the target range. Now, the background to this is that our central bank, which is the Bank of Zambia, has an objective to maintain inflation within a certain range, a given range which is prescribed by the Ministry of Finance, and this range is a minimum of 6% and a maximum of 8%. So the lower target is 6%, whereas the upper target is 8%. And what we notice from the data is that from 2020 first quarter, inflation was already above the upper bound of 8%. So what you're seeing on your screen, the red line gives you the ceiling, what is ideally supposed to be the ceiling for the inflation rate given the target range, whereas the blue bars show you the developments in actual overall inflation. And what we notice here is that in the first quarter of 2020, inflation was already above the target, the upper bound of the target range, but the overall inflation rate deviates further from the upper bound of the target range as we move towards 2021, and we see that the gap between the upper bound of the target range and actual inflation in 2021 first quarter actually widened compared to the fourth quarter of 2020. And so this essentially tells us that we have a lot more to do as a country in terms of reducing inflation within the remaining 3 quarters, because as far as the first quarter is concerned, we are headed in the opposite direction. So achieving that macroeconomic objective in the budget that speaks to reducing inflation towards the upper bound of the target range seems unlikely based on the first quarter of 2021. Now, what is also important, and perhaps we should spend a little bit of time talking about this, is what we like to call the elephant in the house, which is public debt. Now, like we said in the introduction, it is important to accept, to admit that even before COVID-19 hit our economy, we were not doing fine. The economy was not doing well, and most of that picture is attributable to public debt. Now, the developments in public debt indicate that there has been an increase in our debt portfolio. So external debt sort of increased to 12.74 United States dollars as at end December 2020 from the 11.9 United States dollars that was reported at end June 2020. And from that external debt of $12.74 billion, the disaggregation is that 6.8 billion of that relates to official debt, whereas the remaining $5.9 billion relates to commercial debt. But perhaps, again, like we said in the introduction, what is important is to talk about this picture within the framework or within the context of the 2021 national budget. Now, the debt management strategy within the 2021 national budget is anchored around putting a halt to the contraction of further commercial external debt. It's also anchored around putting a stop or postponing as well as cancelling ongoing capital projects that demand a lot of money from our domestic resources. But then what we noticed from the latest statistics from the Ministry of Finance that came out within the first quarter is that our debt position has worsened. Our total debt portfolio now, based on the Ministry of Finance statistics, stands at around $18.8 billion, which is a combination of both external debt and domestic debt. In terms of domestic debt, which is also a very important component of our public debt to talk about, because this now speaks to the domestic economy. So there has been an increase also in domestic debt to about 130 billion kwacha at end December 2020 compared to the 114 billion kwacha that was reported at end June 2020. So in terms of the debt situation within the first quarter, what we see is that our debt position has sort of worsened. But also related to debt, again, what is important to perhaps talk about is debt servicing costs. So we are aware that, like we mentioned again earlier, towards the end of 2020, we saw government putting a halt to the servicing of our external debt. And that made us to become the first country to default on sovereign debt within the COVID-19 pandemic. And so as a result of that, as a country, we have ended up accruing some arrears as we skipped about $42.5 million as well as $56.1 million there about coupon payments which were due in November and December on some of our external debt. Now, what is again important to talk about is that, you see, when the Ministry of Finance sits to draw a budget, so there's a macroeconomic context within the ministry, draws this budget. So when the 2021 national budget was being drawn, for instance, which was in September, around September 2020, you will find that the estimated debt servicing cost out of our total domestic resource envelope was around 70%. That is to say, debt servicing alone was estimated to eat up over 70% of our domestic resource envelope, which amounted to about 68 billion kwacha. Now, that was based on the exchange rate that was prevailing at the time in September 2020, which, if we try and go back to our statistics showing what the prevailing exchange rate at that time was, we noticed that within the third to fourth quarter, so the exchange rate lingered around 18 kwacha per United States dollar. And now the exchange rate is around 21 kwacha per United States dollar. What this essentially means is that our debt servicing costs have substantially increased in dollar terms. So we will now need more kwacha to pay for the same amount of debt in dollar terms than we needed, for example, 3 or 4 quarters ago. So that's how serious this conversation around the depreciation of the exchange rate is. So basically, so these are some of the macroeconomic indicators that we track or that we tracked within our State of the Economy brief for the first quarter of 2021. And I think the takeaway message is that the macroeconomic picture or the macroeconomic outlook for the first quarter of 2021 does not look good. And we are making a point within the brief that this is suggestive of the fact that the long journey to economic recovery is perhaps still at the takeoff stage. So it's important for us to have these conversations around the economy. We do not want to wait until the year is done for us to start having a conversation around what we wanted to achieve and what we have managed to achieve and what we have failed to achieve and what would have been the factors that underpin our failure or our success, as the case may be. So as the Center for Trade Policy and Development, we thought it wise to come up with this initiative to draw a state of the economy brief that highlights how the economy is performing based on selected macroeconomic indicators. And then we're going to use this as we proceed on the show as a lens through which we sort of protract what we think the second quarter is going to look like. But as I get into what we expect the second quarter to look like, I would like to open the phone so that we can get interacting. You can also, from your own perspective, be able to share with me and with the viewers out there what you think about the economy. How has the economy performed from your perspective within the first quarter of 2021? What do you think we have achieved? What do you think we have failed? Where do you think we need to improve? And generally, what you're feeling about the economy. So I will open the phone lines and you will be able to reach the studios looking at the number that will be showing on your screen. Okay, so the phone lines are open. You will be able to get through to us from the studios from the number that is showing on your screen. Would like to hear from you as well, from your perspective, from your personal capacity as a citizen. What do you think and what do you feel about the 2021 first quarter economic performance? So this then, okay, so before I get into the expectations for the second quarter, I have a caller. So hello, good evening. You are through to the Unscripted television show.
Hello, good evening. Thank you. From the way you have explained and from the way things, to me, as a layman, as an ordinary citizen, it looks like the face of the economy is growing. Now, in that case, what should be done? What should be done so that things can be on the right track? Because you have explained things and the inflation, and you have told us exactly what is wrong. So what is it that should be done for the economy to be on its feet again? Thank you.
Thank you very much. Okay, so interesting question there. So we have painted a picture of what we think the first quarter of 2021 looks like, but the question is, how do we move from here? What can be done? I think part of that question should be able to be answered as we present our expectations for the second quarter. So I'll quickly go through one of our major expectations for the second quarter. So going into the second quarter, really, what we expect is that economic growth will sort of pick up pace. So we expect economic activity to improve in the second quarter compared to the first quarter of 2021. And the reasons that underpin this expectation include the reduced uncertainties surrounding the resurgence of COVID-19. I think we have seen, the COVID-19 vaccines coming into the country, and generally we are seeing that people are sort of adapting or have already adapted to the new normal. And what we expect going forward, going into the second quarter, is that various economic agents will get back to full-time work, and economic activity will sort of pick up pace compared to how it was in the first quarter of 2021. So before I go into the other points in terms of our expectations for the second quarter, I'll be happy to take another call and just hear what you have to say. Good evening, you are through to the Unscripted show. Hello, good evening. Hello? Okay, so sorry we lost that call. The volume on your phone is too low, so please ensure that the volume on your phone is loud enough before you call the studios. So we were talking about our expectation in as far as economic activity is concerned, and we are saying going into the second quarter of 2021, we expect people to get busy. We expect economic agents to resume full-time work, and therefore economic activity is likely to pick up pace. But also more to that, I think again related to what was asked, what do we need to do moving forward? So going into the second quarter, if the government adheres to the prescriptions of the recently launched Economic Recovery Program 2020 to 2023, which essentially proposes a tight fiscal approach, what we expect going forward is that the fiscal deficit is supposed to reduce, and therefore create some space for some fiscal space for government to be able to support economic growth. But however, as we proceed, I think we'll highlight some of the downside risks that we think can hinder the materialization of a better macroeconomic outlook going into the second quarter of 2021. So we have another call. I'll be happy to take this before we continue. Hello, good evening. You are through to the Unscripted television show. Good evening. Yes, please go ahead with your contribution. Yes, please, we can get you. Okay, so we have lost that caller again, unfortunately. Try and call us back. We will be happy to get what you think about economic performance in the first quarter of 2021. So before we received that call, I was trying to engage us into a conversation around the government adhering to the prescriptions of the Economic Recovery Program, which is essentially supposed to... Hello, good evening. You are through to the Unscripted show.
Showing exports.
Yes, please.
Yeah, I just want to find out what do we export? Because what we know that why the inflation is so high is because Zambia, we don't export, we just import. Now, for that graph which I've seen, I just want to find what is it that we export to other countries.
Thank you very much.
Yes, sir. Thank you.
Okay. Okay, thank you very much. So the question there is, as far as the caller is concerned, Zambia does not export, we only import. What is that graph talking about? I think we need to contextualize that statement. It is not true that we don't export, we only import. I think what you should have heard is that we are an import-dependent country. That does not mean we do not export. We actually do export. So the copper that we're talking about, for instance, from the mine, and that's what accounts for a larger chunk of our export base. It's what we produce from the mining sector. So a larger chunk of what you saw as exports is actually what are called traditional exports, which include the copper that we are talking about, as well as non-traditional exports. These are exports other than what we export within the mining sector. So we do export. The only problem is that we still have a lot of work to do in terms of diversifying our export base. As it stands, there is an over-dependence on the mining sector for foreign exchange. So I think that's the context within which you need to understand our performance in as far as trade is concerned. Please feel free to call us from the studios. Use the number that is showing on your screen to get through to the Unscripted TV show, and we will be happy to hear from your end what you think has been the economic performance for the first quarter and probably what you expect going into the second quarter. Another point worth talking about is from the monetary policy side. What we saw in the first quarter of 2021 is that the Bank of Zambia raised the policy rate from about 8% to 8.5%. Now, the background to this is that in 2020, I think when we look at our inflation graph, we will see that inflation continued to increase from the first quarter of 2020 all the way to the first quarter of 2021. Now, what we saw when COVID-19 hit the economy is that the Bank of Zambia was now faced with a trade-off between raising the policy rate to fight inflation in the short term and lowering the policy rate to induce liquidity into the economy and support businesses as they were trying to recover from the negative impacts of the COVID-19 pandemic. And so what we saw in the latter half of 2020 is that growth concerns sort of outweighed inflation worries for the central bank. So we saw the central bank lowering the policy rate even when inflation was rising. The idea was to try and inject some liquidity into the economy and support businesses as they were trying to recover or come back from the effects of the first wave of the COVID-19 pandemic. And so partly that contributed to the picture that we see in terms of inflation. But in 2021, in the first quarter, the Bank of Zambia sort of went back to the fight of inflation. So we saw the bank raising the policy rate by 50 basis points from 8% to 8.5%. But also within the first quarter monetary policy committee statement from the Bank of Zambia, the bank indicates that it has scaled up interventions into the foreign exchange market. And so going into the second quarter, as these measures take full effect, we expect that, for example, the trend in inflation will sort of moderate. But also more to that, we expect that the slowdown in inflation to a large extent will be explained by a slowdown in food inflation, because now we are getting into the harvest season. So we expect food supply to improve on our markets, and therefore the prices of food commodities or food items on our markets will sort of slow down, and that will moderate pressures in headline inflation. So what we see as overall inflation, which is now at a quarterly average of 22.17%, going forward is expected to sort of slow down, supported by a slowdown in food inflation as well as non-food inflation, given that the exchange rate actually benefits from the rise in copper prices and copper production and stabilizes. Please feel free again to call us using the number showing on your screen. Would like to hear from you in terms of what you think has been the economic performance for the first quarter and what you think is the picture going forward. I think another point worth noting in as far as the picture going forward is concerned is the conversation surrounding public debt. So within the first quarter of 2021, what we saw is that we saw government getting into talks, formal talks, as we like to call them, with the International Monetary Fund, the idea being to try and agree on a formal IMF program, which is called the Extended Facility Program, so within the Extended Facility window, if you like. So this is supposed to be a huge step towards us being able to successfully navigate our debt restructuring process. But I think what we get from those talks, by the time they were done, I think the only substantial feedback that is in public domain that we get from the government and IMF talks is that the two parties agreed to use the Economic Recovery Program as a basis to come up with a more detailed reform agenda. So we don't have this, the specific details of what exactly the IMF is looking for. That is not already there in the Economic Recovery Program. But anyway, what we're told is that the exchanges have continued towards the finalization of a program. So going into the second quarter of 2021, our hope is that government and the IMF can agree to a program so that we can now move to successfully restructure our debt, which is going to contribute greatly to the stability of our exchange rate and the stability of our economy as a whole. Feel free to come through, call us through the number that is showing on your screen. Share with us what you think has been the economic performance for the first quarter of 2021 from your perspective, and what you think the second quarter of 2021 is likely to look like. What have we done right? What have we not done right? And where do we need to improve? So as much as we say the second quarter is expected to register a better macroeconomic outlook, like we mentioned again, there are some downside risks. So there's some variables that we think, if they materialize or if they do take place, the macroeconomic outlook for the second quarter may be as bad as the first quarter has been. And one of these is the prolonged exchanges between the government of the Republic of Zambia and the International Monetary Fund. This has greatly slowed down our efforts towards being able to restructure our debt, which is something that is going to free up a lot of resources within our budget to try and finance other programs. But another concern that we see that may affect the implementation of various programs that can steer economic recovery going forward is conversations surrounding the political economy. So we know we are headed into elections. We are just 4 months away from August. And so what we foresee is that it may be, as has been the case in in past election years. Okay, before we continue with that, we have a caller. We'll be happy to hear what they think about the economy. Hello, good evening. You are through to the Unscripted television show. Hello, good evening. We seem to have lost that caller. Please try to call us again and give us your thoughts about what you think has been the performance of the economy in the first quarter of 2021. What do you think is going to be the performance of the economy going forward, and what do you think we have done right? What do you think we have not done right? Hello, good evening. You are through to Unscripted.
Good evening.
Good evening, thank you. You are through to Unscripted. Your name and your contribution, please.
I'm calling from Gabon. I was asking a question on the gloomy face of the economy.
Yes.
According to how you're explaining now. Look at the huge debt that the country has. What do you think, again, should be done? Because for us as ordinary citizens, we get worried every day when we are told that the debt is very high. Because we know it affects our livelihood, and if it affects whatever we do as the ordinary citizens. So now what should be done as a country for us to reduce the debt? Thank you.
Thank you very much. Okay, so what should be done as a country in order to sort out our debt problem? So I think the beginning point really is to admit that we have this problem, because the first step to sorting out a problem is admitting that you have it. So we need to admit that we are in a debt problem. We may not classify it as a crisis yet, but it is a problem. And so what we need to do going forward, number one, is to ensure that we are able to restructure our debt. Our debt position, external debt is at $12.74 billion, like we saw. And domestic debt is at 130 billion kwacha, which is equivalent to a $6 billion domestic debt. So that is too much. We cannot manage to service that without restructuring the total stock of public debt. So what we need to do is to be able to restructure the current stock of debt, but also perhaps what we need to start having a conversation around how we can avoid getting ourselves into a position where we need to go and borrow. So this essentially means we need to work towards narrowing the gap between our planned expenditures within our national budgets and our domestic resource envelope. A case in point is our 2021 national budget. So our 2021 national budget, you find that our domestic resource envelope, I think, was pegged around 68 billion kwacha. That was against a budget of around 119 billion kwacha. So what we noticed from that budget, for instance, is that about 48 billion kwacha of that 68 billion kwacha is estimated to be spent on servicing the current stock of debt. And so what remains is around 20 billion kwacha, which is not enough to cater for what we call government recurring expenditures. These are expenditures on payment of government salaries, or salaries for civil servants, if you like. So what we have in the 2021 national budget is that we were in a position where we needed to borrow, either to service the current stock of debt, or to service or to finance these recurring expenditures for the government. So what we need to do is we need to work towards narrowing the gap between what we plan to spend and what we are able to raise as our domestic resources. How do we narrow that gap? So there are two approaches. In fact, we can say three approaches. So we have two extremes and one that combines the two. The first one is we need to rationalize public expenditure. So we need to sort of set our priorities right, and also be able, like we have indicated in the 2021 national budget, that we need to rescope some of these projects. One of the factors that drove the rise in the stock of public debt in the past 5 or so years is the infrastructure development agenda that the country has implemented. It's a good thing to have infrastructure development, but when you want to do all these things at once, then it puts you in a situation where your fiscal space becomes tight, and to be able to continue financing these projects, you are left with no choice but to get on the market and borrow. So we need to re-examine how we set our priorities within our national budgets in terms of public expenditure, but also we need to boost our domestic resource envelope. How do we do that? We need to expand our tax base, and we need to come up with ways in which we can appropriately and adequately be able to benefit from the informal sector, be able to capture the informal sector within the tax net. That way we will be progressing in terms of narrowing the gap between our domestic resource envelope and our planned expenditure, which is going to reduce the need for us to borrow more. So even if we restructure our current stock of debt, if we don't attend to these underlying factors that have led us to the market to borrow, 5 to 10 years from now, we'll be talking about the same thing, we'll be back at it again. So I think that is the approach that we are supposed to take going forward as far as the debt position is concerned. So I hope we have tried to answer that question. Please feel free to call us again. Try to call us again using the number that is showing on your screen and get through to the show. Give us your thoughts about what you think has been the performance of the economy in the first quarter of 2021, and what do you see, or what are your expectations, or what do you hope to see as we get into the second quarter of 2021. Call us using the number that's showing on your screen and give us your thoughts around what you expect. So before we receive that call, I think I was trying to get into a conversation around how the political economy is likely to act as a downside risk to a better macroeconomic outlook going forward. So I think we have seen in many election years that there is always a temptation for government to increase its appetite to spend in an election year. So going into the second, third, and fourth quarter, I think it will be important for us to sort of raise these conversations around the need for government, to stick to what has been prescribed within the economic recovery program. That is to say, we need to actualize what we have, indicated in terms of austerity measures. But before we get into the details of that, we will be happy to pick another call. Hello, good evening, and welcome to the Unscripted show.
Good evening, sir. Thank you very much.
Your name and your contribution, sir.
Good evening,
Yes, please go ahead.
Yeah, mine is the fuel is the keeping of any economy. When your projection and the things we look at the realistic, is it true that fuel can be cheaper? And is it true that if fuel becomes cheaper now, will reduce the high cost of living that we experience today, and then trickle down to the economy of households? That's what I wanted to clarify.
Okay. Thank you very much. I think I can pick up that conversation from, I think, the latter part of the question. Do we think cheaper fuel prices can contribute to a better macroeconomic outlook? Essentially, that's what the question is saying, and the answer to that, I think, is yes. So fuel prices speak to the cost of production and distribution within the economy. So when fuel prices, slow down or decline, we expect that the cost of production would as well go down, and ultimately you have improved supply of various goods and services within the economy. But do we see fuel prices going down? This is highly unlikely. I think within the COVID-19 era, we saw a drastic reduction in oil prices, for international oil prices, for instance, but that did not translate into reduced domestic fuel prices because of this picture that we have talked about partly, which is the exchange rate. So because of the exchange rate, we were not able to benefit as a country from the reduction in international oil prices, because the import cost for petroleum products, for instance, was still high given the depreciation of the exchange rate. So that is how significant this exchange rate is to the performance of our economy. But energy prices, definitely, that's one of the things that we need to have a conversation around. If we want to recover the economy, we need to explore ways in which we can improve the supply of energy in the country. We need to explore conversations around energy conservation, explore conversations around energy substitution to moderate our overdependence on imported petroleum products, to sort of reduce the impact of energy prices, for example, on inflation. It's also important to note that when you have increasing energy prices, you also expect your inflation to respond positively, firstly because of the energy component that exists in the consumer price index, which is used to compute the inflation rate. So the ultimate prices of goods and services on the market are certainly going to go high if our energy prices remain high. So that is also a conversation that we need to have around how we can, reduce the costs of energy in the country. Call us on the number showing on your screen to get through to the Unscripted show and share with us your thoughts about what you think has been the economic performance for 2021 quarter one, and what you feel and think will be the performance going into the second quarter. What have we done right, and what do we need to do differently going forward? So I was having a conversation before that call around the upcoming elections and how they can potentially affect the materialization of a better economic outlook going forward. So one of the things that we see going into elections, for instance, is there will be all these empowerment programs, if you like to call them that way, where there will be money that will be given out to this or the other person. And the challenge with these empowerment programs, while the intention is good, the challenge is if you do not implement them in a coordinated manner that ensures that your empowerment programs speak to the productive sectors of the economy, which can then support economic recovery. What you end up doing is you inject money into the economy, so you have a lot of money in an economy that is not producing proportionately, and that is going to lead to a situation we like to refer to as more money in the economy chasing few goods, and then we would see the inflation picture that we're talking about getting worse. So that is one of the downside risks going into the second quarter of 2021. We have to wrap it up here, and I think the take-home message from our discussion and conversation for tonight is that the picture or the macroeconomic outlook for the first quarter of 2021 looks pretty bad. We have started on a slow note. We still have 3 quarters to make things right. We'll continue having these conversations around what we need to do for our country, our mother Zambia, our beloved economy and country, to ensure that the economic picture brightens. Our expectations going into quarter 2 overall is that we are optimistic about how quarter 2 will turn out. But of course, we take into cognizance some downside risks which may affect this macroeconomic outlook. My name has been Wakumelo Mataa from the Center for Trade Policy and Development. I have been your host for tonight's Unscripted show. Until next time, it's a good night from me. Thank you.